me when I since I got this chart, I don't have any questions that I have to add. I know that I'm getting out of the trade. If I'm in calls, I'm taking profit here, and I'm looking to establish a put position if they get weak right here, because I can already see that the last time they came up here, they dumped Microsoft from 457 all the way down to 385, right? And then this is the first retest of that zone right here. So I know that it's a lot of sell pressure right there. This is where the institutional bears are camped out at. So you see what happened. We came up here and tapped it twice, and it dropped from 455 all the way down to 415. Okay. So this is why we have these zones on our chart so that we can see where smart money is positioned at on the chart, and we can take advantage of that by, you know, paying attention when to exit and when to enter into trades based off of where their positioning is. Now the other part, hold on for a second. Okay, I'm back. Let's see. So the other part to trading is to understand how your moving averages work. And so on the Wolf chart, we use three different moving averages, and I'm gonna go over each one so you can see kind of how I use moving averages, and you can take advantage of like this skill when you're doing your trading. Okay. All right. So the first one we're gonna look at is the 12 EMA. All right. So the reason why I use the 12 is because the 12 EMA is the best in class for exponential moving averages at determining what the short term trend is going to be. Okay. So when you're dealing with moving average, that number that you put in front of when they say, "Well, I'm using the 9 EMA or the 12 EMA or the 50 or the 21," it's just looking at, if it's the 12, it's looking at the 12 previous candles of the stock to determine what the trend is. If it's the 9 EMA, it's looking at the 9 previous candles to determine what the trend is on whatever time frame you're on. Okay. So if you're on a daily time frame and you're using the 12 EMA, it's basing the trend and its slope, how it moves and how it bends and turns. It's going to base that off of the past 9 candles if it's the 9 EMA, in the past 50 if it's the 50 EMA, and it takes that calculation of price action and all these different things, and it tries to determine which direction the trend is, and it tries to signal it to you by how it's sloping and things like that. Okay. Now the way that I use the moving averages though is I look at the candles behave. I look at the candles behavior around the moving average. So what I look for to determine what a trend is going to do is I look for a candle to show me extreme weakness or extreme strength beneath or above the moving average. Okay, and I'm gonna show you what that looks like. I'm just go to the 1 hour time frame. So what that looks like is, you see how Microsoft was in this little downtrend right here. Can you see that? And then so we were a little choppy right here, but then when we got a candle to open and close back above the 12, let's zoom in. So this candle right here, the entire candle is back above the 12. So you see how we were here, we were dropping, we lost the 12 EMA here with this candle, and then it tried to get back above it here. This candle's touching it. That candle, we had this big red candle come down, and we had this nice green candle to pop back up. But all of them are touching the 12 EMA, right? Or they are not getting back above it to reverse the trend because it's in a downtrend right here. But then you see this candle right here. So this candle is the one that it got back above, completely above the 12 EMA, with the body of the candle and the wick of the candle being above the 12, which is, the thicker part is the body and the skinny part is the wick. This candle right here has no body basically. It's like a doji. It's just like a little like a plus sign. So in itself, it's a reversal candle, but it's above the 12 EMA, but no part of the candle, like the wick, how the wick of this candle is touching it and the wick is touching it. This candle right here is the one that signaled strength above the 12. It conquered the 12 because no part of this price of this candle touched the price of this 12 EMA. So now it's just above it and it dominated the 12. And so now we can come out of this uptrend with this signal. And you see how after we got this candle, we got a decent trend reversal, right?
Yeah.
We got a decent trend reversal. And you can see that constantly. Like when we lose a 12, like we lost a 12 here with this candle wasn't a signal. That candle wasn't a signal. This one wasn't a signal for a reversal. This candle was a big, beautiful green candle, but that doesn't mean anything unless you get this candle right here. You want a candle to stay above that 12 without coming down and touching it at all to signal that the trend is finna shift. And then not only that, this reversal right here, you got multiple candles consecutively closing over the 12 without touching it. That showed true strength that they was ready to go up in a strong way. So now if you zoom out and look at that reversal, we were able to move up from 430 all the way to 450 on Microsoft after this signal. Okay.
Mm-hmm.
So that's what you want to look for down. So you see, we lost the 12 here and we dropped, and here we regained the 12 by opening and closing the candle above it. If you zoom in, you can see that wick is not touching it, and then we lost it again with let me see what candle made the turn. This candle right here, open and close under the 12, and we got a nice drop. And you can, if you zoom out on this line, you can see the trend shifting back and forth off of us losing or keeping and holding above the 12 or falling beneath it, right? So what I did with my 12 EMA is I wrote code. It has what you call dynamic color change. So instead of having to look for this candle all the time, all we do is we look for, if the line is blue, that means that the 12, a candle must have opened and closed above it, because the only way it can flip, only way this line can flip colors is if this condition is met. And so when a 12 EMA is blue, that signals that you're in the uptrend. And when a candle open and close and shows weakness under it and confirms, the line flips to red to let you know that we're in a short term downtrend. Okay. You got any questions about that?
No, sir.
Okay. So we use the 12 and just keep getting used to hearing the term short term trend detection and then long term trend detection, right? So the 12 is our short term trend detection system because it's only taking in consideration of the past 12 candles. What we use to detect what the long term trend is, we use the 200 WMA, which is the weighted moving average. And I'm gonna show you what that looks like on a chart. So we take the 12 off. The 200 is looking at 200 candles to try to tell us, okay, the stock is in a bull trend or a bear trend. So since it's looking at more candles, we use this as our long-term trend system because it's looking at more data, more candles. So this is when a person say a stock is in a bear trend versus a bull trend, like an overall bear trend or a bull trend. You base that off of your 200. So you can see that I made the 200 yellow and bright and sunny, right? To signal that we're in this uptrend right here. And so when this 200 is yellow, it's showing you that the overall trend of the stock is bullish. So your bias needs to be leaning bullish while you're above your 200. And when you're under your 200 and it's red and bearish and depressed, your bias needs to lean toward puts because the stock is actually in a bear trend on that time frame that you're looking at. And so if I zoom out here and you look at you got a bear trend here. If you were trying to force calls, you had to be very quick and be in and out with calls because the overall all the money is to the downside, right? And if you were in puts here versus calls, all the money was being made to the downside. Anytime you losing that 200, you see that it's immediately bearish. Like Microsoft is under the 200 right now, and it's being getting sold off. Right, it then dropped from about $10 or $10 to $14 now since it lost to 200. Okay. So even though we have these pullbacks, so this is how we take advantage of the pullbacks though. So like let's look at this example right here. When we get an open and closed candle under the 200, just like the 12, it flips the 200 to red when a candle shows weakness to signal that the trend has shifted